Okay, good morning, everybody. Thank you so much. Well, actually, it's afternoon for you. It's morning for me because I'm in Guatemala, so it's 11 for me at the moment. Teddy, I don't see where the questions are for people. I don't have that. Oh, there we go. All right, cool. I got that ready. I just want to have everything ready and set up for you all. Um, okay. So I just wanted to say hi, and if you guys are here, please give me a shout out. I'd love to know that you all hear me, that you are seeing my screen, just so that you are all around. Let me see here. There we go. Oh, awesome. Hi, everybody. Cool. I am seeing everybody here. Very, very cool. All right, so let's jump in. I am the Trader Chick, and today we are gonna be having some fun with the charts. I'm Marina, and the Trader Chick. This is me with one of my baby boys. Well, it's a big kid now. So today we're going to be talking about 4 steps to analyzing the live market for high probability trades. And what I will be covering, excuse me, in this presentation is understanding market movement, using your indicators for the best entries and profit targets, reading the live market and spotting those trade setups, and how scalping helps you become a profitable and a confident trader. At least it has for me, and I have been forever grateful to scalping. So just a quick bio, I guess, intro about who I am. This is me. This is my family. I am an expat mama living in Guatemala, Antigua, Guatemala. I don't know if anybody of you know that. It's in Central America, right under Mexico. I am, a fun fact, I am trilingual because I was born in the USSR and was a refugee from Russia. Well, back then it was the Soviet Union to the United States 41 years ago. So that's why I'm fluent in Russian. English is technically my second language, but it's really my first language. Is the one that I was raised with from 6 years old. So it's the one that is more my language to me. And then I also speak fluently in Spanish because I have now been living in Central America for over 18 years. First, we lived in Costa Rica for around 7 years, 8 years, and now in Guatemala over 10 years. So I really prefer Guatemala over Costa Rica. So if any of you have any questions about that, I'll be happy to explain why. Okay, and another fun fact about me, before I actually started day trading, I was a professional fitness instructor and a travel writer. I actually am still a travel writer. I have been the travel experta, which maybe a few of you, if you ever look me up in Google, I usually come up with this first. I have been doing this for over 11, 12 years now, and this was my sole way of us living. And then I became a day trader because I've really always wanted to be a day trader, but around over 7 years ago, on my 40th birthday, I just went all in and started to really learn how to day trade. And that's how my day trading career kind of started. We don't have that much time for me to get into all of that right now, but I'll be happy to tell you more if you guys want. You could always contact me at thetraderchick@gmail.com or thetraderchick.com. So just a really quick special announcement. If any of you are going to be in Dallas for the Money Show, I am presenting on the 14th, and I would love to meet you guys. There's going to be a lot of other really great traders and money pros, and it's just going to be a fun event. So Dallas, October 13th and the 14th, and I'm on the 14th. You can actually go here, thetraderchick.dallasmoneyshow.com. All right, so let's get back to the basics and building your trading foundation. All right, let's dive in to the live market. Hang on a second here. Why am I not getting out? All right, you know what? Before I dive in, I see quite a lot of people are here. I just want to say hello to everybody. I'm so grateful you guys are here. I really am. I know how there are only a few really true commodities in life, and time is certainly one of them. So you guys taking the time out to be here with me and the other presenters is a really huge thing, and I appreciate that. Okay. Oh, Amanda, you've been to Antigua. Yes, it's really fun. It's beautiful. Um, P.S. Why is the question? Why do I live in Antigua? Or not sure what the why goes for. So if you want to let me in on more of the context, I'll be happy to explain. Okay, so let's jump in to the charts. All right, so just so you guys have a little bit of an idea of what I am, I trade the ES Mini, the E Mini, the S&P 500 futures index. So I work with NinjaTrader. This is my platform. It is my preferred platform because there's so many different aspects to it. You could have everything right here. You don't ever have to go off into a dome. You can if you want to. I know that some people still prefer the dome. I personally don't because I am more into scalping, which actually, let me give you a little bit of, I don't have it here. Okay, so what is scalping? I don't know if any of you guys actually know what scalping is. Being a scalper is somebody that goes for very small profits in a very quick period of time. So I personally only go for 1 point targets, meaning if you look here at the side, you will see these numbers, right? 2958, 2959. So these grids, this is 1 point. So if you guys just want to give me a little bit of a heads up, if you guys know what is the ES Mini, or if you don't know what futures are, because I know to some people it's a little bit of a different thing. Normally people like to look at stocks and all the other stuff. So just a quick, I guess, little explanation of points when it comes to futures, especially for the E-mini. Each point is worth $50, okay? So for every single time I go in for 50 bucks, I mean for 1 point, that means I'm looking to go for a 1 point for $50 per contract. So the beauty with futures is that each point is, let's say, $50, but you don't have to go for higher targets to make more money. You can just go in with more amounts of contracts. So if you go in with 10 contracts times 50, you've got $500 as a profit. It's still the exact same amount of time that you are going to be looking into rather than sitting and holding for the longer targets. All right, so let's talk about the basics of understanding what the market tells us, right? Because if we don't understand what the market is going to be saying to us, it's almost impossible for us to actually listen to it, okay? So let's begin here. Right here, this is where the day break is. Pretty much this is where the market began. And it started off pretty. Here, let's go into the day before, right? So this is the day before. I personally only like to look a little bit at the day before simply because I want to see if there were any important areas. So as we start to understand what the market tells us, as individual traders or retail traders, I don't really like that word retail trader. I prefer the individual traders because usually we are trading for ourselves. We can never move the market. And this is something that is so important to understand. Kind of like going back to Pete's presentation right before me. I'm not sure if some of you are new and haven't heard what he was talking about. He talked about the mind, right? Trading is so much of our mental challenges and what our mind is telling us. And I noticed when I first became a trader that I always wanted to beat the market because there's this misconception that we need to beat the market. So when you want to beat the market, what does that mean? You want to kind of predict what it's telling us or what it's going to do. As if the individual trader, the little trader who maybe goes in between 1 to 100 contracts. I know to us, 100 contracts could be like a ridiculous amount. But honestly, the people that are moving it or the institutions that are moving it, they're going in with hundreds and thousands of contracts. maybe even millions. So they're the ones that could actually maybe, and even then, it's not even definite, can move the market. They could basically, what I guess that saying means, beat the market, can possibly do is beat the market. It's impossible. You can never beat the market. And the minute you begin to mentally really register that you'll never beat the market, a lot can change for you. For me, I always had this thing that I had to beat the market. So what was I doing? Right, so here is this really good, strong movement down. So I personally would be like, okay, well, it's got to correct. It's got to correct. So when I started to notice these types of retracements, what I would personally do is I would start trying to go in the opposite direction. But it's not true. There's no possible way for me to know if it's going to go in that direction. So me trying to predict it and beat it was only actually hurting me. And this kept on going on in many ways, right? So when I used to see this kind of a slowdown, I'll be like, of course, so now it has to slow down. Now I have to go in the opposite direction. Or if I started to notice that the market was going to be going in a channeling direction, and I'm looking here, okay, so it doesn't want to break to the up, so it's already been going straight down. I'm predicting that it's going to continue down, and then I was going to go in for shorts. And of course, once again, I have no idea if it's going to go for a short. I don't care at this point. But at that point, that's what I was trying to do, is trying to beat the market. So I was constantly looking to see what it was doing. And in reality, it's not for me to notice. What I did start to realize, though, after, oops, hang on, I want to make this a little bit longer. After losing a lot of money in trying to predict a market that wasn't happening, or even worse, I was sitting in trading chat rooms and watching the instructor of the academy, or the person that I was supposedly working with, take trades that I didn't understand what was going on, and I was chasing these trades. I was not fully understanding why I was going for the trades that I was going, or I was trying to beat the market by predicting what it was doing. Oh, I can't even tell you the amount of times I was telling myself, okay, it needs to correct. The market has to correct. I'm going in. This is where it's correcting, and losing so much of my money that at one point I ended up losing almost $4,000 because I was constantly saying, no, the market has to go in the other direction. It's got to go. It's got to go. It doesn't. It continued going in the direction it was going. And after losing almost $4,000, and deciding that I needed to take a break, even though, funny enough, I didn't. I ended up revenge trading for another 2 days, which is, the worst thing you could possibly do. What I realized after taking probably a month off, and either deciding that I couldn't quit. Actually, there was two things on the table that happened when I had my breakdown, was that I was going to quit, or I, you know, or I was going to have a breakthrough. At that point, I didn't realize I was going to have a breakthrough. At that point, I was pretty defeated. So I couldn't leave. And I think the majority of you guys who are here listening and probably being in the same boat as me, of losing money, trying to predict what the market is about to do for us, trying to beat it or whatever, is, even after those huge losses, the market just have a way of keeping us to coming back for more and more. I don't know what it is. It's this really weird thing about the markets and about us traders, but it just keeps asking us to come back for more. And what happened to me was, I couldn't stay away. After about 3 to 4 weeks, I was missing it too much. But all I kept on saying to myself was, there has to be a way. There has to be a way to be able to deal with the markets in a way that it's not only profitable, but that it's simple, right? Because I always found that the trading was a pretty complex thing to do, when in reality, it became quite simple. So what simplified my trading, and what are the 4 main strategies that I have discovered? First of all, I removed probably 50% of my indicators. So let's begin with just that, the indicators. Who here trades with 2 to 10 indicators? Actually, probably more than, I would say, 5 to 10 indicators, right? That is a very, very common thing to do, is to trade with too many indicators. So if you guys just want to throw me in here how many indicators you work with, I would really love to hear that. And the other thing is, how many of you actually struggle with having a strategy that works with all those indicators together so that they kind of work, I guess, together, rather than, oh, this one is on and this one is off, and then you become way too much of an analysis paralysis. So Rajandra, I'm hoping I pronounced your name. Are you just doing like naked charts? Because that is really cool, but I will have to say, I'll explain why that could be a little bit complicated. Alan, 2, James, 1, I love these. Are you guys having actual success with your indicators? Because I am now down to 2 indicators, and Rajandra, I'm going to go back to you because after having like this massive breakdown, I went to a naked price chart, right? And I actually just sat in front of this naked price chart for a really long time. And all I was doing is now just reading it, understanding what it was doing. So there are some things that came to me during that period. First of all, something that I was being taught over and over and over again, and it didn't have to be with my specific trading academy, it was with others, that you have to go for these really huge targets, right? In the E-minis, I was told I need to be looking for 2 to 4 to 6 point targets, which could be really, really complicated when I'm looking at retracements and whatnot. I was also using Bollinger Bands and the Kettler Bands, and sometimes, and you know, I was being told I need to be hitting those outer bands, and they never really hit. But the reason why is because you have to put in a very high risk to be able to go for those higher targets, right? And after I came back and focused on the naked charts, I started to notice that the bars, the majority of the times when they are switching directions, if you notice here, they go for almost a point. So I decided, all right, so let me just focus on hitting the smaller targets, going for the 1-pointers, right? So here's a really good example. Today has been kind of ups and down, right? It's been going a little bit here after this certain area. What we're seeing right here is from yesterday, we had this channeling market. And then when I opened up my charts, it had this massive gap, and it kind of just went into this particular movement here, right? So let me explain my 2 chart. Okay, so my chart just totally froze up. Okay, so here we go. Cool. We're back in action. Maybe not. Okay. Sorry. Here we go. We're back in action. Okay. So, oh man, I'm sorry. I don't understand what's going on. My charts are not moving well. All right. I don't know what's going on. Not very cool at the moment. Right. Okay. So here we go. They're back in action. So we had a channeling market yesterday. Today it opened up to a gap and a total flat zone. Okay, so I'm not a gap trader, so I'm not going to go into that particular strategy. So what I started to do is I focused on the areas, right? The market has areas that it will respect over and over and over again. Do you guys know these types of areas? Usually they are resistance and support areas. So I have my areas drawn out from yesterday because they can return to that particular area. And just so you could see it here, look what's happened. Okay, so I started to really read the areas as in the support and resistance areas. Do you guys know how to discover the support and resistance areas? Do you know what makes them up? Because sometimes it's amazing. A lot of people don't really understand the exact reasoning behind them. So it's not super precise. It could be around an area. I usually use about 1 to 1.5 points as my main area. Okay, so in this respect,
Hello, Marina. Okay, it seems okay, so you guys aren't the only ones who can hear her. I can hear her also. It seems that her something has probably went wrong with her connection, and she appears to be offline. Okay, so just to make sure that it isn't on our platform, if you guys can hear my voice, if you guys can still hear me, can you please let me know, please? Okay, so you guys can hear me. Wonderful. Okay.
Guys hear me? Please give me a heads up.
Yes, Marina, we can hear you now. You kind of
Okay,
buzzed out
so
there
sorry,
for a
my
second.
internet. All right, cool. All right, sorry about that. Wait, are you guys there? Hello?
Yes, yes, we can hear you.
Okay, cool. Sorry, my airplane mode is telling me that it's on. Okay, groovy. Sorry about that. That was the reason why my chart wasn't working well. All right, so back to support areas. So I was mentioning the reason why support and resistance areas are so critically important. Okay, so we had the support area from yesterday that turned into this resistance area that is right here. And you can see what happened, right? So I started to notice that support areas and resistance areas are really important to listen to because the market respects them. Again, because I am a small scalping trader, meaning I only go for really small profits, 1 point profit, that means I have a 1 point risk. This support area is crucial for me to understand where the market is going to revisit. And as you can see from yesterday, it came back to here, right? So also today we had another support area that started to go around here. But technically, if you look at it, it kind of started around here with just a few little drops out. So when it hit this area, and on top of that, it gave me this reversal pattern of a double bottom, I would have known also that it is probably not going to continue in this direction. It's going to bounce off. And that's exactly what happened. Now, the other thing that I started to really, really focus and fall in love with was my MACDs. I added in the MACDs. I've been using them before, and after going through my period of just working with a price action of a bear chart, I added in my MACDs. I've found them before when I was using like 10 different indicators to really be helpful with the strength of the market. However, that's not the only thing I use it for. I also use it for divergences. Who here works with divergences? If you can raise your hand, I'd love to hear your viewpoint on divergence. I found that divergence is probably one of the biggest telling signs, right? So if I am, let me give you an example of a divergence. Okay, so here is a strong market headed down, right? This is an obvious trending market going down. And what you can see here, that the MACDs are headed in that same direction, right? Right here, you can see. However, in this particular section, right here, where it is over here, look at this. This is what I mean about divergence. When I have this headed here, yet the market is pretty much starting around here, I tended to hold off and see what the market does. And then it finally broke through this divergence and headed down. So this is telling me that the strength of the market is continuing in that direction. However, when I got to around here, it's now starting to show me that it's starting to move back up, right? And what happened here is exactly that. It moved up, and then we have this straight line here. However, it's starting to go down here. This is when I'm starting to see the divergence of the MACDs with my price action. And on top of that, right here, before I have an actual resistance area, what it is showing me is that this is a triple top being formed, right? I have little minor setbacks and a straight line with triples, and yet I'm having a divergence. These are my reversal patterns, right? This is when I started to notice that reversal patterns are probably my biggest indicators, and all that you have to do is just watch the market and listen to it. Here is a straight line. I have a beautiful double top right here, right, from this mini uptrend. And on top of that, I'm starting to get a divergence here. So what am I going to do when I see this? I'm already sitting out knowing that the market is about to do something different. And then I've started to notice that it's also an area that is being respected. And when I start to notice that, I all of a sudden notice that this is a sideways market. It's a consolidation, and it's a pretty thin one. This is where the majority of the traders can end up losing all their money. This is when I was talking about that prediction that we could beat the market, and we start to think we could predict the market. So what happens when we are seeing this? We start to be like, well, it's been going down. It's going to definitely head down. It's going to go down, so I'm going to get in here, and I'm going to start to head down. But wait, the MACDs are telling me the opposite. It's showing me that it's losing a lot of strength. There's already starting to be weak price action, and then it's going up to here. I'm seeing now a double top, and it's closing, it's becoming really weak, and now I'm having this divergence. So this is where I am now learning a very important position in the market, and that position is called staying out of the market. Okay, so there's three positions that we learn to focus on: getting in, getting out, and staying out. Staying out is probably going to be your most important position to understand because we become trigger happy. So my MACDs are my probably most important indicator. And then I added in my EMA lines, the exponential moving average lines, right? So these are my indicators right here. I have my main one, which is this red one. This is my 52 period one. Then I also use the 135, which is a larger time frame, and I also use the 20, which is a shorter time frame. I saw that somebody in the questions asked about my 610 ticks. Okay, really good question. Anthony, I'm going to explain what it is. 610 ticks means it is 610 transactions per bar, or in this case, because it is per bar. Right here, you can see right now it's lunchtime, so it's kind of slow. And you can see in real time the volume of the transactions that are happening. Do you guys see this number right here? It says 470. That is the amount of transactions per bar. That means in a 610 tick chart, I am getting 610 transactions at bar movement in real time. It is showing me the volume that is going on. So for me, if I'm in a 5-minute chart, I won't really know the real-time volume, right? However, with a tick chart, I get to do that. And that for me is much easier. So you can see it's moving super slow, right? So right now, I probably wouldn't even really be in this market, right? I would have been looking at this strength when it ran right through here. And look at this. This is where I would be looking for my entries. I call this area from my 135 EMA to my 610 EMA, I call this the magic zone. Because what happens with the magic zone, especially when you've got a really strong trend moving in one direction or another, and yet the MACDs are showing a lot of strength, and as you can see, almost no retracement here, yet I have a retracement to my 610. I call this the magic zone trade because chances are of it going to one point in the opposite direction of the trend is very high, almost 90% probability that it will go to one point. And after that, I'm done because I don't know how far it's going to continue on. And I don't want to be the one to predict that movement either. Okay, and then when it becomes really narrow, this area, it's not the magic zone anymore. The magic zone is only when it's got this huge space in between. And now I will be sitting out. And look at that. It's way too much indecision going on, right? The slowdown is called indecision. It's the consolidation area. And when I'm looking at my tick charts and seeing how slow the movement really is, I tend not to even want to be close to it, especially when it has been going up, tried to go down. It's really having a hard time moving down. My MACDs are getting closer to the zero line. This is the way I work with the two indicators. So why do I use the EMA line? Think of yourselves as archers, okay? If you ever watch an archery competition, or if you even go just for the fun of it to an archery, I don't know what they're called, ranges, I don't know, like shooting range, I don't know if they're archery ranges. We have some archery areas here. You have to stand somewhere to throw your arrow before you hit your target. So honestly, that is the only reason I now use my EMA lines, right? So this is for my 610 EMA line. I also added in this EMA line, which is from a 1597 tick chart, meaning that it's 2.5 times more of a time frame. That means there's 1597 amount of transactions per tick bar. So I put that line here on the same chart so I don't have to go into 3 different charts. This is a smaller time frame. It's my 233. So it's 233 ticks going on that particular chart, but what I'm using it here as my actual tick. I'm using it as another EMA line for, excuse me, for a little bit of more aggressive entries. Like when I have this here, I had this double bottom, I had this divergence, and then it flew to the upside. Again, we're talking smaller time frames, flew to the upside. I would be looking to enter at my 233 because if you look here, I would be looking to enter around here and oops, excuse me, I would have my target, this is my risk, and this is where my target is. Again, 1, 1, and that's it, right? So of this hitting the 1 point target is really high because it's quick, right? With this kind of a move up from my 233, it's a quick move up. It's kind of like a little bounce, right? Until it decides what it wants to do. And that's exactly what happened here. Before it bounced down, now I have zero interest in it because look at the larger picture. I'm now having massive divergence, and here is resistance area line from the day before. It's also telling me that it's hit this area already. So at this point, with divergence and the support, I know that I need to just simply sit out. And when it shows me this magic zone area right here with massive move down, with it being super low, barely a retracement, this is my other entry. So at this point, I literally use two indicators. This one mainly for where am I shooting my arrow from, and this one, the MACDs, I find them to be the most, I guess a lot of indicators lag. I don't believe, from all the experience and all the back testing I've done, MACDs don't lag. They are really good in potentially letting me know what will happen. So if I'm seeing this move up, I've already hit a resistance area, and then I'm seeing divergence, the position I am in right now, even though it's making higher highs, is me sitting out. And then look what happened. It flew through my areas, and then it bounced off of this area with a really barely any retracement, really far from the zero line. And I know that it's going to hit the 1 point, and it did. It hit my 1 point with 1 point target, and I'm good. Right now, look what happened here. Just as I was saying, super slow, barely any movement, and then it's completely gone through. At this point, I'm still not in because it's showing me very little strength with the MACDs. So again, I'm sitting this out, and now I have extended that area that has already been respected by the market several times yesterday, today, and I bet you it's going to bounce through here and just kind of hold off. So these are my main ways of looking at things. So I have a few minutes now. I want to just go over this with you guys. Okay, my indicators, Madgalio I use the EMA 2052, oops, and 135 period lines, okay? Um, oh, you can't see my cursor. Okay, that's interesting. Okay, let me see. My MACD settings are the universal settings. So I'm going to open this up for you guys to just have a look at them. So here are my MACD settings, 12, 26, 9. Every single one of my indicators is completely free. MACD is not lagging to me. What I use it as for scalping, well, you'll know what? There's always something new. Vlado, it is not a lagging indicator. It is showing me that there is potential for things to happen. And when it runs through my MACDs, barely retraces, and I look at this area right here for my entry, right here, I know that this is going to bounce off and it's going to give me that 1 point. After I enter, and look what happened. It continued and then it flew up. And that's when I also look at my tick point showing me that it's barely moving. And look what it's happening right now. It's respecting that area. If you guys get anything, please remember the market respects areas. They respect it. It'll either bounce off of it, fly through it, whatever it's going to do, but you have to be very understanding of the areas that it does. So the MACDs, yes, Sanji, I use absolutely universal MACD line. So just another quick thing that I want to show you with the MACDs. Right here, so you have several different ones. I use the MACDs itself. You'll see then there's also the difference, which I made into transparent, and I also don't use the average. I transparent it. I really simplified all of my my indicators. The more simple I became, the more I was able to understand uh, my trading, to be honest with you. I use between 3 to 10 contracts. I do not use the RTH. I don't even know what the RTH is. So let me go back to go in here. Okay, so I would love to, what I do with my students is I go over the contracts, I mean the charts with them, and I would love for you guys to send me your charts, even if you just have some questions, so I could be able to kind of help you understand what the charts are telling you. That's something that I really enjoy doing. So my question to you guys is, do you have an actual strategy and a plan? For instance, can you right now sit here and let me know exactly what your strategy and your plan is? Because I found that the majority of people, when I ask them, what is your plan, your strategy, they actually don't have one. And that's where I have found that I can help with that entirely. So I have a strategy that I use. It is very simple. Like I said, 2 indicators, 1 point strategy for profit and 1 point risk. So when you're going in for 1 point for $50, you're only putting $50. You don't have to have that stress. And that has been the biggest stress releaser for me, is not going for those huge target profits, which could be between 4 to 8 points, which we're talking like $200 to $400. That means you need to have $200 to $400 per contract as a risk, right? And that is just too hard. So how many of you guys here are actually following a plan that is making you consistent and profitable? Or are you just winging it? And you know what? I'll be honest with you. I did that. I did the number 2 and prayed, oh my God, I can't even tell you, for years. It doesn't help. So what I want to do is I have a boot camp that I show you how to read the markets, right? Those MACDs working with reversal patterns and your support resistance areas, divergences. I cannot even explain to you what that means. It is a language. And I discovered that the market speaks to us in a very specific language, because it talks to us. It literally talks to us. And it made me a very conservative trader. At one point, I was just trigger happy, shooting at every possible thing you can imagine until I started to read the market. And I've learned one of the most complicated things that we have in trading. And you know what that is? Patience. Unfortunately, that is the absolute reality to market reading, is having patience and simply reading it. So that's what I help you do with your boot camp for day trading. That is exactly it. I help you read the market, understand market language, and be prepared for it for any condition. You understand when consolidations happen, when the sideways markets happen. You understand when to sit in, and you also understand when it is a perfect entry with a small retracement from the MACDs where you could get in with over 90% chance of entering. Right now, normally the bootcamp is $297. For you guys, I am doing it 50% off, but that's not all. This is where you could do it through videos, and it's charts, and it's showing you how to really read the market. But the best part about it is I help you set up your charts, which took me almost 5 months of doing myself. And then you understand the trending markets, the market movements, shifts, reversal areas, support resistance areas, divergences. And on top of that, you work with me one-on-one. So you send me your chart and we go over that, because you'll be surprised how many times people think that they're looking at a certain thing, or even a divergence when it's going down, but you're looking at the pivots on the going up, or you're looking at an area which you think is support, and when it's just one tiny pivot. I mean, there are so many things that as your mentor, I will be able to help you with. And that is included. Normally it's $350 per hour. It is included in the boot camp for one entire month, one-on-one. And I do my students' charts all the time with them. I have students all over the world, and this is just some of the testimonials that I have. Again, it's right now 50% off. And I'm just reading your questions really fast. I don't use Fibonacci's because Fibonacci's, you go in for the higher targets. I only would use that once I already got my 1 point profit. My goal is 1 point, because when you hit 1 point, guess what happens? You start to get a confidence in you. That is what it's all about. It's about lifting your confidence levels. Okay? That's what it's all about. That's why scalping changed my life. I was looking for those huge targets with the Fibonacci's, the Kettler bands, the Bollingers, and I wasn't hitting them. Yet I was somehow moving my stops bigger and bigger and bigger because my ego was not permitting me to sit out. It was a horrible ride. But once I really, really came to understanding that 1 point target, 50 bucks, 10 contracts, $5, that's all you need, and you're out between 3 to 10 minutes, and you don't have to sit through that and suffer through all of it. I only do the E-mini. My really huge recommendation, focus on one instrument until you master it. I love the ES Mini right now. I am also starting to dabble with the micro ES because it is a little bit different because of the volatility, not so much in the actual structure of it because it's slower. But I love it. I love the ES. It gives me all that I want. I've learned to master it, to just read it, to simply listen to the market. Being trilingual, I realized after losing a lot of money, the market has its own language. And that's when it clicked in me that, oh my God, it's a language that I can learn. And I did. And I would love to teach it with you, one-on-one training with me. Again, please go here, thetraderchick.bootcamp. And if you have any questions, you could go here as well, or just thetraderchick.com. You could find me anywhere around here as well. And please let me know what you guys think. And just remember, day trading, it isn't only a job, it's a lifestyle. And once you really, really learn how to read the market, which you can, you'll only be able to do for a couple hours a day, and then you have the entire day for free for yourselves. So any questions, please let me know. And thank you so much for having me here.